What's up, guys? Welcome back to the channel. Malik here, and today we're going to look at an index, an inverse index or ETF, which is called QID. And basically in this video I'm going to show you two things: how to make an option free, and then like how to profit when the market is going down. So the QID, first, when you're trading a stock or an option or a ticker, you need to know what you have exposure to. So if you're trading the QID, if you just type in QID, you'll see various definitions of what it is. But look at the analyst report here. So this ETF offers 2 times daily short leverage to the Nasdaq 100 index. So if you're used to trading, you know that if you're short, means that you're bearish or you're looking for it to go down, right? So this offers you 2 times leverage short position to the Nasdaq 100 index. And just a little reminder, if you're not sure what is in the Nasdaq 100 index, it's basically the main companies that are in the US stock market. So most of these names you'll probably know or see before or used. You have Apple, Airbnb, Adobe, ADP. You've probably seen this on your W2s or if you're getting paid. Autodesk, Align, AMD, Amazon, AMD, Baidu. Let's see which other ones you know. Costco, CrowdStrike, Cisco, Dollar Tree, DocuSign. So the QID would give you an inverse exposure to this. So if this goes down, the QID goes up. So let me take you into the platform here and show you the exact trade. So this trade is still running. I have until when is this? April 14 to expiry. But I'm going to show you how I made this free. And this is a trade I entered because I was expecting the market to go down because of interest rates and probably the Russia-Ukraine tension, which is getting a lot more heated up now. Personally, I want to explain to you that I don't really trade technicals that well. It's something I'm trying to learn a lot more. But if you want to learn more about technicals or even get signals, you can look in the description below for Rocket Signals. I'll leave their link below. And then it's a good group with a lot of options traders, and they can really explain and go on explain everything for you. It's a paid group as well, but I would really recommend it to just get started. So the QID, let me see if I can find the exact trade. I don't want to get confused because I trade it regularly, I must say. But the QID 21, I want to stick to this specific trade. So if I was to go to the history of this one, so one thing I like to do with trades, if it is going in my favor or if I have enough confluence, like I believe that the trade is going to go my way and I'm going to take the trade, I want to ensure that I have enough to exit the position, make it free, and let the rest of it ride without having any exposure to risk. So after I make this trade, I try to get out the position, make it free. Anything after that is just solely profits, and I'm not worried about the position. So with this one, I purchased 20 contracts at $1.20. So I figured that, all right, the market is going to go down. These are fairly priced. I'm not the best at getting the right price, but I'm looking at what's the fundamentals of the market, what is the sentiment of the market, and then I got into the trade. So I bought 20 contracts at $1.20. So you have to keep your risk low, so that's why I try to make the position free so I have no worries and it just runs. So you can see here, I wanted to do the calculation because it can look a bit complicated, but look at it as I bought 20 things, 20 options for $1.20. So each of them were for $120, right? So if you were to calculate what I took out, so when you see buy, that is what I spent. When you see sell, this is when I'm exiting some of the positions or closing some of the positions. So you see that the options price here had already gone up, so I was making profits from those already. I was making profits from those right here. So I sold 2 for $3.40. So let me put it here. I sold 2 for $3.40, right? So how much would I have left? 18. So I have 18 left now, right? And then I sold 10. I sold 10. You see right here, I sold 10 for 1800. 1800. Sold 10 for 1800. So that leaves me with 12. So that leaves me with 8 contracts here, right? With $2,140 of my money back. How much would I have to get back to get the rest of my investment? $260, right? To get all of my initial investment out. So it would be a risk-free trade. So you see on January 24th here, I withdraw $480 out of the trade. So I closed some more, putting me at 2,620. So I actually am in profit now. And then I would have 6 contracts left there, right? And then here I sold one more contract for $320 when the market started to go down a bit more, right? So $320. So there I'm up to 2,940, right? And I only have 5 contracts left, right? And then I sold one more here, February 11, for $170 plus $170. No, $170 actually. So 3,110. And then you have the whole trade still riding. And let me calculate this back again. Or we can just check how much I have left running. So you can see I have 4 contracts left here. Total return 212. So it's $692 floating here. If the market goes down more, you can see more appreciation in this, but this is a totally free position. So I want you to understand how you make the position free and how I get into the trade there. I will work on the craft much better and be able to teach people, but this is how I understand it for now. I'm not the master of it yet, but I'm getting better. So you see I have this amount. I'm out with this amount already, and then I have a floating trade here. This is just free money and it can ride. This actually covers me for the interest rate hike that should be in around March 16, whenever the Federal Reserve has their next meeting. So I just wanted to show you that this is a way that you can do 2 things. You can profit when the market is going down, and then I wanted to show you also how to make a position free. So thank you for watching this video, guys, and I'll see you in the